Hi guys, we have a lot to talk about, so I'll try and break this video down into clear chapters, so please feel free to use the timestamps. Tesla investors have been having a rough old time recently, and it's only those that have been digging deep into their research, seeing and understanding what's actually happening and working on controlling their mindset that have been at peace. Just before we jump into the content, I want to say a massive thank you to everyone who has been joining my Patreon. We are now at full capacity. It's now going to be a one in, one out kind of policy because I want to make sure it stays as a really tight-knit community. Right, okay, so Tesla stock. Let's clear that first and then we can move on to the more interesting stuff, understanding the company behind the stock. Year to date, it's down by 30.86%. 6 months is down by 34.69%, and over a 1 month time period down by 3.38%. This means that not only has Tesla stock been underperforming the index, but also other tech AI related companies like Nvidia and Google. And it's also been underperforming automotive companies like Ford, but not Rivian, so have no fear. So what's been causing this decline? Well, as always, it's been a number of different things. We've had the Q1 delivery numbers, we've had the speculation cancellation, that could be a rap song, of the 25K car. We have downgrades, which to be honest are getting a bit boring and a bit predictable now. They're coming in thick and fast. However, I have seen one recently that is a bit better. We've had a price target by Adam Jones from Morgan Stanley, who has maintained a $310 price target. There's been many things, and we will cover all of these and even more. But I think something really important and something really, really interesting is starting to happen when it comes to Tesla, and that is the narrative is shifting. For a long time, it's felt very split. You've had the hardcore Tesla investors and fans on one side, and then you've had the haters on the other side. For a long time, we've had Tesla investors really hammering this message that Tesla is not just a car company. There's lots of big catalysts coming up. Things are going to get very, very interesting in the future. This stuff, this bullish narrative that Tesla investors have been driving. And then, on the other hand, and I can kind of understand why, people are saying, well, hang on a minute. Tesla is just a car company because the majority of their revenue is coming from EV sales. Therefore, they are just a car company at this current time. And they're saying not only are they just a car company, but they're a car company that have been seeing some revenue decline quarter by quarter. So financially speaking, they're not even doing that well. And then we have a lot of mass media saying that autonomous driving is dangerous. It's far off being anywhere safe for the population to actually utilize. We're seeing people say that Elon Musk is actually causing a lot of issues for Tesla and Tesla stock. We've had low delivery numbers, etc., etc. So the story being painted from everyone that isn't invested into this stock or researches this stock in thorough detail was one of panic and one of worry. But I do really see that this is starting to change, and it's actually becoming one of excitement, one of people moving past the stuff that I just mentioned, and one of people focusing on what is coming in the future, such as the Robotaxi. And paired with that, I think we are entering a pivotal period. When the economy eases, rates fall, financing costs start coming down, start declining, we have the gross margins beginning to stabilize, lower costs, the sentiment shifts, and just the market gets more optimistic and starts focusing again on growth. But at this current stage, although I see that starting to happen, the waves are starting to come slowly, I do think right now we are still in a period of uncertainty and of risk. But in my opinion, if you've calculated your risk tolerance, you've calculated your risk capacity, you've done your own thorough research, this is the prime time to be accumulating Tesla stock. That is, of course, not financial advice. This is just based on my own research and my own opinion. And I imagine we are going to start to see large amounts of retail investor and fund manager money move into Tesla stock. Perhaps we will even start to see more money move from the likes of Nvidia and other big players that have been performing very, very well, and actually move that money back into Tesla. As now, like I said, we have a new narrative coming, and the stock, in my opinion, has just got to the point now where it's almost too cheap to ignore. Again, just my opinion. And this is already happening actually. For example, ARK Invest, they have been selling quite a lot of Nvidia throughout February and into March, and now they are starting to accumulate, starting to buy up massive amounts of Tesla. But we do know that they are quite bullish on this company long term. They have some of the most crazy price targets for this company. Whether you think they're crazy or not, It's kind of up to you. Personally, I'm not selling Nvidia in order to buy Tesla, but I am buying as much Tesla as I can. Even with the excitement of the Robotaxi unveiling date that we've had on X and Elon Musk's tweets about how Tesla will be willing to license FSD to other companies, there has been and there continues to be quite a lot of general skepticism, general criticism, and lack of optimism. And I do see this all over the place about Tesla when it comes to institutional investors, fund managers, and also analysts. The things that we always hear include Elon is always delaying timelines. He never delivers things when he says he will. The only remark that I have when it comes to this is, yes, that is true. There has been many, many times in the past where Elon has given a date and he's failed to meet that date. However, please cut this guy some slack. Yes, he's missed some dates, but he's been one of the people on this earth right now that has, in the majority of cases, delivered at some point what he says he will and has delivered revolutionary technology. Then we've heard FSD is not good enough, it's dangerous. We've heard not everyone will want autonomous driving. People won't want robotaxis, there won't be a demand because people like driving. Adoption just won't be there. There's too many regulatory hurdles. The list goes on and on. I have two thoughts on this. One, I kind of understand where fund managers are coming from. They are managing other people's money. They're not managing their own portfolio. They're managing other people's retirement funds even. There is a lot of responsibility, so maybe they need to take less risk. So maybe they are kind of right for worrying and actually wanting proof. They don't feel comfortable investing other people's money into something that, is not happening right this very second. My second thought is the Robotaxi and the bot actually changes Tesla's business model completely. And in my opinion, analysts and other people who are ignoring this and just not seeing this for what it is are missing a massive, massive thing. Right now, the majority of Tesla revenue does come from selling vehicles. The evidence is there, there's no denying it. But I just sit and think, and I've been thinking about this a lot recently, what will Tesla's revenue split look like in 2 years' time? 5 years' time, 10 years' time, 20 years' time, because I don't see a world where it doesn't look vastly different with everything they're currently working on. And we've already been seeing this start to actually change. You can see between 2019 and 2020, the energy segment revenue went from 1.531 billion to 1.994 billion, and then to 2021, 2.8 billion to 3.9 billion to 6.035 billion. The growth has been really, really quite incredible when it comes to this segment. And although we are in early days, you can see that this shift is starting to happen whereby energy becomes larger and larger, and slowly over time, and services, this will happen for services as well, and then slowly over time the automotive segment will become smaller and smaller. It will still be very large, but it will become less and less insignificant, especially as we have energy and services increase and any other revenue streams that they have in the future too. Okay, so FSD, full self-driving. I think it's really, really easy to focus on the wrong things here. The whole point in Tesla's FSD is safety. Safety, safety, safety. The technology is meant to be way, 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 way safer to an extremely high degree compared to human drivers. And there is no doubt that safety is Tesla's top priority when it comes to this technology. Second is convenience. It's really important that FSD is superior in terms of convenience, but this will not happen at the expense of safety. So we see a lot of metrics, a lot of data that comes out that says a driver had to intervene with the tech 4 times in one short journey. Okay, but is that 4 times that if the driver hadn't intervened, then there was a potential crash? There would have been a potential crash and a human life would be at risk. Or is that just 4 times when the driver decided to intervene because maybe the driver wanted to speed up the car a little bit? It's really important to dive into those data points really, really closely. The way I see it is there's just too many eyes. There's too much visibility on Tesla for them to be putting out technology, for them to be rolling out FSD in their vehicles that just isn't safe. They will ensure that they have massive amounts of data to prove wholeheartedly that their FSD technology is way, way safer than a human-driven car. I have no doubt about that. And I was a passenger in a car the other day, and I was, looking at the cars around me, and I literally saw this guy driving. It was, quite a nice car. I think it was a Mercedes, but anyway, that's beside the point. And the driver, this guy, was sitting, and I'll show you, he was sitting on his phone like this in front of him, and his steering wheel was here. There is no way that he could have seen what was going on around him. He was focused on his phone. Yes, it was traffic and we were moving slowly, but if a kid had run out in front of him, no way would he have seen that. He would have absolutely hit that child. So there's people like that. There's drunk drivers. There's people that are putting human lives at risk every single day when they're driving a car. The whole point of FSD is to eliminate that. Right, now let's turn our attention to the Q1 deliveries, because it was rough. It was very rough. And no doubt they did not deliver the numbers that the estimates were predicting. And this caused the stock to sell off. In the delivery press release, Tesla said this: declines in volume was partially due to the early phase of the production ramp of the updated Model 3 at our Fremont factory, and factory shutdowns resulting from shipping diversions caused by the Red Sea conflict and an arson attack at Gigafactory Berlin. They also said that they deployed the highest quarterly deployment number of energy storage products that they ever have before. So to me, it does make sense why these numbers came in a little bit lower than we were estimating. You know, there were circumstances that were happening to Tesla that Tesla had not caused, like the attack, like the Red Sea crisis, that were outside of their control, that did impact the numbers. But I had a little dig into the rest of the industry because I was interested, you know, was it just Tesla suffering and they reported lower than predicted numbers, or actually did the whole industry have a similar experience? And it turns out that the rest of the industry had a very, very similar experience. BYD, in fact, reported that their first quarter sales fell by 43% compared to Q4 2023. Although they had a poor quarter, and I do want to see this improve, providing that it does improve, how many cars Tesla delivered in Q1 2024 won't matter in the grand scheme of things, especially when we have the progress in FSD and everything else that they're working on. And this just shifts to being a minority of their revenue actually coming from vehicles. When we look back in 2027, 2030, we won't look back at this one quarter and think, oh my God, I should have sold. That's my opinion anyway. It just seemed like so many people, especially the media, were just completely freaking out when Tesla are behind the scenes curating so many additional revenue streams that will be bigger than their EV businesses right now. When we look at the delivery numbers across the 4 quarters for Tesla since 2016, this is actually the first time that Tesla has not increased their Q1 delivery numbers. I've tried to show this visually here. You can see this little blue square at the end on the right here. I'm trying to show that actually the Q1 2024 numbers were lower than that of the Q1 2023 numbers, but they were higher than that of Q1 2022. So a little dip, but hopefully we will then start to see this pick up moving forward. Then, after the Q1 numbers, as if things couldn't get more rocky, especially for Tesla stock, we were of course hit with the article. The article that stated that Tesla scraps low-cost car plans amid fierce Chinese EV competition. This was concerning at first for sure, but it quickly became apparent that something funky was going on. I actually put this message on my Discord when it was all kicking off. I said, I don't think this is quite as bad as it seems. The original plan was to make a car that was a mass affordable one that could be used for the Robotaxi platform. As they were a while off getting to full FSD, they were settled on producing a mass affordable car in the meantime, essentially the same car but with a steering wheel. So I think, and this was before we had the confirmation, and we will have to wait for Tesla/Elon confirmation, is that they are just getting closer to FSD, and so we'll just do the non-steering wheel version now. Not great English, I was obviously typing that in a little bit of a hurry, but what I was basically trying to say is maybe they are just shifting their priority. Maybe they're seeing the FSD is getting so good that actually they don't really need to make that mass affordable car to sell, but they will use the same platform, maybe just without a steering wheel, and actually use that vehicle for the Robotaxi fleet. That was kind of where I was sitting. You can see the time and stuff that I posted that as well. But that last sentence that I wrote actually then happened. We did indeed get confirmation, and I think this was one of those times that a lot of Tesla investors were absolutely chuffed that Elon is sharing a lot of things on X. And then we had Franz, who is the chief designer at Tesla, say this.
I think investors and consumers would love to know if the $25,000 car is dead or just on the back burner?
I would just say stay tuned. Don't always believe in what you read.
However, Sawyer, who is a massive, massive part of the Tesla community, and if you don't follow him on X, you are missing out, he tweeted that maybe Elon and the team have been so impressed with how good FSD 12 has performed that they were maybe thinking they should be shifting even more resources to the Robotaxi FSD effort. This doesn't mean that the 25k car is cancelled. Again, they share the same platform. He then went on to say the 25k car is far along enough that they can afford to shift some more resources to the Robotaxi FSD effort. This doesn't necessarily mean anything is delayed. And then we had Elon reply to that with just those eye emojis, sort of like looking. And that kind of can be taken as a confirmation that what Sawyer has said is true. And this does actually seem to be the case indeed, because Tesla have been putting up a load of job openings. These jobs seem to be titled prototype vehicle operator and things like that, and they were put up about 8 or 9 days ago, which does fit into this narrative that maybe they have the Robotaxi prototype and now they actually need humans to test this so that they can unveil this on the 8th of the 8th. Again, that is something that Elon Musk tweeted, that they will be unveiling the Robotaxi on the 8th of the 8th. Didn't give a year. I can only assume that it's the 8th of August 2024, which does make sense. We know that they kind of want to start production of the Robotaxi in 2025, I believe it was. So a 2024 reveal, it does fit. Before we dive into the Robotaxi a little bit more, because I have a lot of things that I want to tell you about, we need to quickly talk a little bit more about FSD. Some really, really exciting things are happening that we must be aware of. Massive improvements with FSD, with the technology, have been coming out. Updates are happening in quicker and quicker succession to each other, which, is a really, really strong thing to be seeing. And Elon confirmed, like I said at the beginning of this video, that they will be willing to license FSD technology to other car companies. I do think a lot of people are predicting that Ford will be the first company that actually gets on board and licenses the FSD technology from Tesla, as they were with the superchargers. But either way, whoever is first, this will happen. Other companies will have absolutely no choice. This will then start to put significant amounts of pressure on the competition, because ultimately they have one of two choices. Either they license Tesla's FSD software and hardware, which of course means consistent SaaS revenue for Tesla, which is a massive thing, or they just miss out. Why is this? Well, it's because it will just take them way too long to develop this stuff on their own. This then means if they don't have an offering in terms of autonomous driving, they will just lack a competitive edge, because that is the way the world's moving. Why will it take them so long? Why don't they just do it on their own? Well, think about how long this has taken Tesla. Tesla has been working on this stuff for a long, long time, and this is a company that moves faster in everything that it does than any of the legacy automotive companies do. And you've got to think as well, a legacy automotive company or a different company, even non-legacy, that doesn't have FSD technology right now, they don't necessarily have a leader who is so interested in AI, who is pushing. They might not have the top engineers that actually know about this stuff and can move a project forward quickly. But also remember, even if they decide to work on this on their own and don't want to license it off Tesla are the ones with the data advantage. And recently we learned that actually 1 billion FSD miles have been driven. And you can see that there was this inflection point in September 2023. But then if you zoom in, you can see a substantial inflection point happening very, very recently. You can see that this graph just looks like it's heading upwards. We are seeing exponential increase. And I actually said that this would happen in a video 7 months ago, but we're now in a very unique position whereby Tesla is no longer limited by compute power as they were before. And then you pair this with the fact that they've been doing their free FSD trials, and we're just seeing this graph take off. So why is this whole idea of Tesla licensing the FSD technology software and or hardware out to other companies a really, really strong thing? Well, it's because it will have SaaS margins, and this will help Tesla create a high margin revenue stream. This should not be overlooked. With Tesla increasing their data, their AI grows smarter and smarter, and it grows smarter quicker and quicker. It's like a snowball effect whereby their data advantage is actually accelerating, which then means it gets harder and harder and harder as time goes on for others to compete. I don't really see a way out of this. So yeah, this is just another example of something that is happening. And it's happening whilst we have people looking at the automotive challenges to interest rates, something that is cyclical and will come and go over time. But whilst people are freaking out about, we're in high interest, Tesla are struggling for now, blah, blah, blah. We have Tesla out here bettering themselves, preparing for the future. Okay, so now let's think about the Model 2 vehicle a little bit more and the Robotaxi. It does make sense for Tesla to switch and actually prioritize the Robotaxi. And I think, if anything, this is super bullish. The Robotaxi fleet is commercially and economically way more beneficial for Tesla and therefore for Tesla shareholders. Think about the difference, economically and profitability speaking, between a 25k car being sold as a one-off and a Robotaxi fleet. The lifetime value for Tesla of a Robotaxi fleet is way more than them just selling a 25k car. Because when you think about it, they sell a car, they take the profit, that's it, it's done. They take no more profit after it being sold. Whereas that is not the case with a Robotaxi. You can sit down and do some rough maths, and you absolutely should, but let's just say Tesla sells a Model 2, the mass affordable car, for 25k. Out of that 25k that they sell it for, they take a small portion of that as their profit. But then if this vehicle is actually part of their Robotaxi, let's just say that they get $1 per every mile it's driven, or even 25 cents for every mile, whatever that figure is, plus a base fee structure if that's what they decide to go to. That just all means that one car would make so much more money for Tesla over its lifetime. And I spoke about all of this in this video here that you should absolutely go and watch, and I'll tag it on the screen somewhere now so you can click on it. But I spoke about how as this scales, as the Robotaxi fleet scales, it becomes cheaper and cheaper. It then becomes way cheaper if it's not from the off actually than a traditional taxi, and even Ubers and Lyfts and other options over time as well. Then it gets to the point where it becomes way more convenient, way cheaper than not only traditional taxis, than other taxi services like Uber and Lyft, but it also becomes better than traditional public transport. Because with getting a train, you have to walk to the train station, you have to pay a fee, you have to get on that train, you get off at the other end, then you walk to your destination. With a Robotaxi, like with an Uber, you don't have to do that. You get on at your current destination, it takes you to the door of your other destination. So if a Robotaxi is cheaper than an Uber, it's a no-brainer. It's going to wipe out public transport as it scales, and it's going to wipe out traditional taxi services, Ubers, and everything else like it. Remember as well that the Model 2, the mass affordable vehicle, and the Robotaxi are essentially the same platform. I'm just assuming that the Robotaxi has no steering wheel because it is driving itself. That's the only real difference I can think of. Maybe there are, some of you that know the tech a lot more than me, and there are some other differences, but it's the same platform. I've been thinking about this a lot recently, about their Robotaxi fleet, because it's super interesting. And when you're a Tesla investor and you're a massive nerd like me, this is how you spend your time. Anyway, it does make sense in a way when I think about it for them just to skip selling a mass affordable vehicle completely. Not even do that. They were always going to do that, but maybe they're going to skip it now and instead build a network of them, keep them, under their control, a Tesla-owned Robotaxi fleet, and then just make a Tesla taxi network. But I also then remind myself that their whole mission is to accelerate the world's transition to sustainable energy through increasingly affordable electric vehicles. So if they make a mass affordable vehicle that they can sell, that makes complete sense and aligns completely with their mission. So would they actually want to skip that step? Maybe they will sell the mass affordable vehicle, the Model 2, whilst they scale their Robotaxi fleet, and then at some point, once it's really big, they will just stop selling the 25k car completely. Possibly they'll decide to do that. Or would they just sell the car and make money whilst doing this, but also allow people to rent their car to the Robotaxi fleet? To sort of give it to Tesla at a fee whilst they're not using it. Because actually, so many cars are just stationary at any one point. When you're at work, when you're at home, when you're sleeping, you only use your car for such a tiny portion, and the rest of the time it's just sat there doing nothing. And a UK study actually showed that the average car is driven for only 1 hour out of every 24 hours. So in theory, Someone that owns this mass affordable vehicle that's purchased one could rent it out to the Robotaxi fleet for 23 hours of the day and then use it for the 1 hour that they need it for to get to work, to get home. And this would be quite an interesting model if this did happen, because this would earn money not only for the owner of the Tesla, but also for Tesla themselves. And they would also be getting the money that the owner has to pay for FSD, because of course that will be the new norm and you will need full self-driving to actually put your car into the Robotaxi fleet. Assuming that that doesn't just come as part of it at the mass affordable price, which I don't think it will, especially initially. And again, this is software as a service revenue, and this is potentially reoccurring revenue whereby the owner of the Tesla pays for the FSD software every single month. So it's a recurring SaaS margin revenue stream. And then Tesla would be keeping a portion of the money that the customer actually pays to use the Robotaxi fleet vehicle to, get to a destination. So however much it is to use a Tesla Robotaxi per mile, which in theory should be a lot cheaper than public transport because, you've got no driver to pay. It should get cheaper than Ubers and all things like that. They will keep a portion of that, and then I'm assuming a portion of that would also go to the Tesla vehicle owner as well. Who knows what the split between the owner of the vehicle and Tesla will be? Maybe a 70-30, maybe a 60-40. But either way, as this scales, this is just money flowing into Tesla. I would assume that they would have a standard cost to actually use the vehicle, a base rate that you pay when you get into the vehicle. And then they would also change this amount, maybe depending on the time of the day, if it's in demand. Different busier areas, non-busy areas may be cheaper, and then maybe you pay more if you actually want to tow something using the Robotaxi. There are many different elements that could come into play here, and then on top of this, I assume that the customer would pay per mile that they travel as well. What's really smart here as well is that Tesla probably won't have to do anything. If they control and own the fleet, maybe they will have to take care of cleaning and maintenance and stuff like that. But if they decide to go down the route whereby they have the owners of the Tesla sort of take charge and they just take a portion, then actually it will be down to the Tesla owner to do all of the cleaning, the maintaining, the insurance, all of that stuff, charging the vehicle as well, which then means little cost to Tesla. We don't know what they're actually going to choose to do with the Robotaxi fleet yet. Either one of these models makes sense to me. The point is that either way, whatever they decide to do, the intricacies of the business plan that they decide to actually implement doesn't really matter. At the end of the day, either way, Tesla will be making a hell of a lot of money on this. Do let me know what you think Tesla will end up doing with the Robotaxi fleet in the comments below. So in this video so far, we've covered the Q1 deliveries, we've covered the stock price, we've covered the article that wasn't really an article, we've covered licensing FSD out, we've covered reaching full self-driving and what that could mean, increasing energy segment revenues and deployments, Robotaxi, all of this stuff. But what else is going on? A lot. I don't have time in this video to speak about everything, but let me just give you a quick whiz through. And if you want me to make a whole video in detail on any of these topics, just let me know. We of course have Optimus, the Tesla bot, which I will link a video on the screen now where I spoke about this. You absolutely must study what they're doing with Optimus, because if you think the Robotaxi and the potential there is big, you wait until you sit and think about the numbers that are possible with Optimus. But we have Optimus developments, and then we'll probably see that Optimus is actually being used in Tesla factories to do useful work if it isn't already, but we will actually find out about that from Tesla. Potentially, we have Tesla going to India. That is sort of brewing at the moment, and I've spoken about this before actually in multiple videos, but that would be absolutely massive. In general, new factories, I imagine we will see many new factories pop up, maybe in India, maybe elsewhere as well. We'll have the scaling production of the Cybertruck. Now, the Cybertruck is getting so much attention, especially from celebrities that have a massive reach. So Tesla aren't even having to put money into marketing, and everyone knows about the Cybertruck. Very, very smart. The semi-truck, I imagine we will see that increase in production and in deliveries. We'll have more supercharger hardware being sold. The supercharging network in general will get better and better and better, and it will grow and grow and grow. But the supercharging hardware, Tesla have already had a few deals that many people haven't really spoken about, whereby they've actually sold the hardware to other companies. I imagine they will continue to do that as well. And then we have the Roadster as well, which we'll be hearing about very, very soon. So there's so much stuff going on with Tesla. So when people freak out about what's happening in the here and now, try and detach yourself. Try and think about what's coming for Tesla, because ultimately as an investor, you are investing into the potential of a company for the future. You're not investing into the company because what it's doing right now and what it's done in the past. You are investing in the hope that this company gets more intrinsically valuable and therefore your money will become larger in the future. If you didn't already know, I currently have 2 workshops. One of them is paid, one of them is free, and both of them will help you level up your investing knowledge and increase your confidence. The paid workshop is one that I've put a lot of time and a lot of effort into. It is a 4-hour video course split into easily digestible sections, which will take you from finding investment opportunities to researching them, financials, risk, competition, metrics, sector research, and much, much more, to keeping up to date with these positions once you invest into them. With that workshop, you also get a 1-hour live Q&A recording. You get a stock decision flowchart, a 17-page booklet on mastering your mindset, the blueprint checklist so that you can take this step-by-step guide and actually use it going forward. So anytime you come across a stock, you can put this into place. The free workshop is a 1-hour, 15-minute video workshop where I take you through how to analyze your risk tolerance, your risk capacity, how to calculate how much you can afford to invest, allocation, diversification, rebalancing, sector rotation, and much more. If you want to find out about either one of those workshops, please check in the pinned comment and in the description below. Thank you so much for watching this video. I hope you enjoyed it, and I'll be back with another very soon.